Thank you, Mr. Chair. I appreciate that. As most Iowans know, their local lender allows their institution to offer pretty customized services, particularly where they live and operate. This could be a farmer, a small business owner, just a fellow dad trying to help out. Iowa's approached our financial regulatory framework, I think, pretty thoughtfully, which is why we still have over 250 small lenders across our community. Many states 5 or 6 times our size don't even have that type of diversity in the lending system. I look forward to reversing some of the damages, Mr. Chair, that were done under the Biden-Harris administration that have hindered lenders, restricted our economic growth, and disproportionately affected rural communities across our country. Mr. Chair, I would like to submit for the record the list of priorities coming from my Iowa Bankers Association, from the Iowa Credit Unions, and our Iowa Community Bankers. This lays out a very good framework of what's working in a place like Iowa, and maybe a recommendation on things we should be doing at the federal level.
Without objection.
Thank you. So let's get to work. First and foremost, Section 1071 rule. I remain concerned that 1071 forces our small banks and to level additional burdens on our businesses. In fact, they're requiring 81 different data fields. Now, that's a 30% increase over what's federally mandated. So this is already something, when we talk about efficiency, we can start looking at. An Iowa bank with just 17 full-time employees wrote to me recently and said, we do not have enough manpower on staff to address the compliance requirements coming out of 1071. It's going to force us to hire another employee. Now, in a small community, when you're spending another 6-figure investment to meet a compliance requirement, that's money that is not being spent in that community or helping a local borrower. So, Ms. Owens, I'd like to talk with you. How does the impact to community institutions to report 133 different data fields between 1071 and the beneficial ownership reporting requirement impact a local lender?
Well, it would require us, or it will require us, to invest more in the compliance side of complying with this regulation, which absolutely directly affects what we are able to invest in the communities, and not only making loans in the community and staffing loan officers to be able to do that, but also supporting the local food pantries and financial education and many things that we do.
You hit the nail on the head, and thank you for highlighting the ripple effect this has across communities. It's one of the reasons I'm proud, Mr. Chair, to co-sponsor Chairman Williams' bill to repeal 1071. I'd like to also speak to tailoring. Now, institutions of different sizes and business models are purposefully different inherent on where they are. In fact, most Iowa lenders have under $7 billion in assets. But the Biden administration chose to treat every lending institution the same as a multinational bank in New York with $3.9 trillion in assets. Now, with respect to my friends from New York, across the rest of the country, we're talking multi-billions of dollars. You know, for comparison, 7 billion inches is roughly 110 miles. That's enough for me in Des Moines to drive to the birthplace of John Wayne in Madison County. But it would take that same amount of inches if we were trying to talk about 39 trillion inches. From my house, the same distance would be to the sun. So to put that into perspective, this is how we are treating vastly different sums of money and regulation on a small bank that's here to Madison County versus a big bank, which would be the equivalent of from Des Moines to the center of the universe. So, Ms. Marshall, I'd like to ask you, do you think that tailoring regulatory caps to account for inflation would alleviate some of the immense regulatory burden that is crippling banks and lenders right in Iowa?
I absolutely do.
I'm glad to hear that.
And Mr. Nunn, if I may,
Yes, ma'am.
Your previous question about the compliance impact on our institutions and our community banks, in addition to the cost, what I also find that when I talk to bankers is that they're having a hard time finding the talent. Quite frankly, not so much just the willingness, but the expertise, and sometimes it is the willingness of staff that they're going to bring in. And to an earlier member's question about the next generation of bankers, right, who's going to come into those institutions in those rural communities and take on this massive burden? Where is that resource going to come from? That's another reason our community banks are looking at how can we continue to survive when we don't have the resources, both financially and personnel.
And Ms. Marshall, I could not agree more, because what I want my local lender to do is to help Main Street buy that first combine for a farmer, help a kid get an F-150, not spend most of their time trying to understand regulatory compliance out of DC that is outdated, overbloated, and can be rescinded.